2009, and we service institutional clients, mostly hedge funds, mutual funds, venture capital firms, multinational corporations, consulting firms. And when they want to get smarter about something, they come to us and they give us very detailed granularity on what they're looking to understand, and we put them in touch with experts that can help explain it. I know that you guys are getting ready to do an investment challenge. So somebody that I have joining us later, his name is Tom Askey, and he's with Allspring Global Management. He's a senior research analyst and portfolio manager. So he uses our service to help him make investment decisions. And then Christina, who's on, she also has worked with ENG, and she's doing other things as well. She's also going to school for landscape architecture, and she can give you a little background on herself as well. But what we wanted to do today is just give a little bit of an overview of the market, different investment vehicles that are out there, and get you started on the right track of making investment something that's fun, something that you can easily learn about, and that you know that there's so many different resources that you can go out and either read or talk to people to get smarter about what you're investing in. And I want to make sure it's fun for you guys. So I think we want to get through a couple of things, and then at the end, we'll take some questions. And at the last 10 or 15 minutes, I'm going to have Thomas come in, who actually does professional investing for a portfolio. They manage about 18 or 19 billion dollars. He'll give you some insight on things that he looks at when he's making investment decisions. So on that note, I'll leave it to Christina. I think she put together a couple of slides. And if you guys have any questions about ENG before we get started, let me know. But again, we provide experts for our clients for for investment purpose. Christina, you wanna?
Yeah, thank you. I am not a technology wizard. That's why part of the time I might have been looking off in the distance, but I am me. I've worked with ENG off and on for the past few years. I guess that's the benefit of being involved in like a family business. I'm sure some of you know that your parents have their own businesses and somehow you get involved, but this is joyous to me. My other passion, as you mentioned, is landscape architecture and environmental planning, which I guess seems like kind of not related to investing, but actually it is. And let me just dive right into the presentation. And forgive me, I'm new to Google Hangout or Google Meets for sharing. So
we've been using a lot of Zoom, and
yeah,
from what I understand, you guys can't use Zoom, right?
Yeah, that's right.
All right.
Boom. Okay. Okay, cool. So everyone can see my screen, right? I can't see you all.
Yeah, we can see it, Christina.
Okay, cool. So the first question is, why is investing important? Obviously, it allows you to reach financial goals. As you guys know, you're going to have to save for education, whether it's for yourself or for your dependents in the future. You might want to buy a house one day. You might want to buy a car. You might want to go on vacation. So investing can allow you to get to those goals faster. Number two, wealth building. And I know at this stage, especially in high school, when you think about building wealth, that seems kind of like something that like grown-ups should do, or like people far in the future will be dealing with. But the truth is, successful wealth building starts at a pretty young age. And I'm sure that you all have seen the graphs that show, if you put X amount of dollars starting at 25 versus 35 years old, the exponential growth is pretty significant when you start investing young. And we can talk about that later on. And the third part of why I think investing is so important is that it helps you guys understand like what is a good investment, what's a bad investment. And when you think about those two things, it doesn't just apply to stocks. you're going to be asked in life to invest in people's businesses. You're going to be asked to make decisions like, should I get an MBA? And you're going to be able to more critically analyze those choices. And also, like, one day you might decide that you want to start a business and you're going to have to make yourself investable. So again, it just sort of gives you a broader idea of why this is such an important topic to talk about. So there's 3 types of financial asset classes. Cash equivalents, which are like, you can do those through banks. They're more steady. They're short term, usually have low risk, and they're pretty low reward, in my opinion. But those are like CDs, things you can get at the bank, but you can get your money in and out quickly and with a little bit of growth. Bonds, and of course, stocks. And we're going to focus more on the stock aspect and just getting a broad overview of what is a stock, who manages these things versus the other 2. And we can certainly talk about those other 2 at another time if you guys are interested. So what is a stock? Does anybody want to try and answer what a stock is? I don't know. Sorry, I don't know if you actually can. I gave it away. I don't know if you guys can chime in.
Kashav has raised his hand.
Okay, go ahead.
Isn't a stock a partial share of a company?
That's exactly right. So yes, that's it. It's a fraction of a company. And this definition is directly from Investopedia, not my words. But every company that offers a stock or shares has defined a specific amount of fractional parts of their company. And when you own this type of security, you become what is known as a shareholder, which is kind of exciting to think about, like owning a fraction of companies you like Netflix or Nike.
Well, I think a question to ask maybe, Christine, is how many of you guys actually own stocks right now in your own portfolio? A lot of people. That's great. Five out of I don't know how many are on, but 19. It's great.
Sorry about that. Okay. That's excellent. And I know that many of you obviously have stocks in your Investopedia portfolio, which is great. I wanted to touch briefly on these 2 types of money managers, mutual funds and hedge funds, especially because Tom will be joining us later on. And you guys might have heard these terms, mutual fund or hedge fund. I would say the key differences is that a mutual fund is open to the public, and their investment strategy is a lot less risky. So they're going to do like longer holds. They're going to pick names that aren't as necessarily as volatile. Obviously, there's external factors that make investing risky to begin with, versus a hedge fund, which is like a private investment group. And they offer their services to high net worth criteria or high net worth individuals, and they have to meet specific criteria. So if I had $100, I can't go to a hedge fund and be like, make me some money. And then their investment strategies are typically riskier. So when a hedge fund works with Prady's company, ENG, they are usually looking at shorter holds, and they're looking at shorting and options and different strategies. So their needs change a lot in the names they look at.
Can I give an analogy of that? So like behind me here, like this dollar sign, right? It represents red and green. And hedge funds, no matter if the market is red, they can make money. And if the market is green, they can make money. And their job is to hedge the market, and based on whatever volatility is going on, the more volatile a market is, the better hedge funds perform versus a mutual fund. But that being said, I forgot to mention this. When I started ENG back in 2009, the S&P was 660. Okay, today the S&P is 4,500. So if you look at the performance of a guy like Warren Buffett, he buys companies and he holds them for the long term. And you can see something like that, like back, I think Apple in 2009, don't quote me, but I think it was about $15 a share. And today it's split adjusted, trading at $178 a share. So the return over long term, you can get a great return over a long duration, and you can also get a great return if you are with a hedge fund that is navigating difficult markets. And I know that for your Investopedia challenge, it's only for a month. So this is something you're going to have to look into, like how are you going to get the best return in the month? And I think Christina's going to go over some of the places where you might be able to obviously get information that will help you in a month-long challenge. But I think Jacob, you were telling me you might extend it for even longer, maybe a year duration, right? Like until the end of the year.
Yes, that's right. We were probably thinking about extending it to the end of the school year and then starting it up again at the start of the school year.
Cool. Sorry to distract Christina, but I thought that was a good, segue for me to kind of interject something I'd forgotten.
100%. Yeah, and feel free to jump in. One thing I wanted to know is, does anybody know how old you have to be to open a real trading account?
I don't think I even know the answer.
Any ideas? If there's anything in the chat, I can't see it. So Prady, if you can.
Austin
Is it
has raised
18?
the hand.
Okay.
You have to be 18.
Yeah, you do. You have to be 18. But that doesn't mean that you should wait until you're 18 to think about your finances. I'm sure that many of you have allowance or you have jobs or you make money from whatever. You should start thinking.
Your parents have opened up accounts in their names and
100%.
they can get a head start. Yeah.
Right. So one thing that your parents might already have or something that they can do for you if you're interested is opening a custodial account. The custodial account will allow them to invest on your behalf. And if your parents are nice, they might even let you, dictate where some of that money goes. Maybe there's stocks you're interested in or different equities. And I just mentioned that, so I'll breeze through. So we're going to talk mostly, again, about the stock type of financial assets, and we're going to talk about choosing these investments because some of you might be wondering, how do I even know where to put money? I'm sure you guys hear a lot of news about markets going up or things hitting a bottom or, a meme stock. So we'll talk a little bit about all those things. So this is from 2019, and I have to admit, the pre-COVID world was pretty different. The average investor was totally different. A lot more young people are investing now, but this is I think a good information set from the U.S. Federal Reserve, and they do this, I believe, every 10 years. And one of the things they ask is where do you get your info? 57% said business professional. So those could be guys like Tom Askey, who's going to join us later. They could be people that work at a more commercial firm, like somebody who's a wealth advisor. 45% said the internet. I'm sure that number has gone up. 44% said friends, relatives, and associates. Advertisements and media, or 20%, and then calling around. I don't know if any of you guys call really anybody anymore. You're probably texting, but I thought it was interesting that 13% called around. I know Prady still does, and I know a lot of people still do.
Well, I think talking to people goes a long way. You can learn a lot, and that's essentially what our business does. We connect experts, and our clients talk to them to get an understanding of what's going on in the market. So actually, a lot of people do the calling, but I'm eager to hear what about you guys? I see investing on TikTok, on Instagram, but how trustworthy are those sources? What do you guys think?
I think there's definitely a lot of misinformation and stuff that goes around, and you just gotta be careful about who you're hearing about stuff from and what do these people have to gain from you, taking advice from them.
Yeah. There's a funny commercial on right now. It's a baby and they go in and the last thing I remember them saying, they're taking advice from memes. And the kid's all right, pack up my onesies. and like he like goes to help like the people, because I mean, like that's the whole thing. Like the internet is like a black hole, and you can go down that black hole and not get the best information. So I think one of the things that Tom will probably explain is that like he'll read a report from a bank, and then he can't even trust that. So he likes to do his own due diligence by talking to people that do something every day for a living, and that way it's called a channel check, and that way you can get a very good handle by talking to somebody that lives and breathes something on what's going on in that industry or what's going on in that segment of the world that he cares about, whether it's chips or how a specific drug is selling in the market. That's something that you can only really get by doing these types of channel checks and talking to people that are deeply embedded in a business.
Yeah, that's totally true. And I think that's the value really in Expert Network Group, is like getting real-time information. And I just want to fast forward to Brunswick Digital. They do an investor survey every single year. I'm excited to see the 2022 survey, but they do a great analysis between what people use to investigate issues or things they're interested in, and then what they actually use to make an investment decision. And so you see, like, obviously investor relations website is the highest for both investigating an issue and making an investment decision. So that's something for you guys to keep in mind. Like if you haven't looked at an investor relations website, they are available for every public company, and they are on the website. So like Nike has one. Anyway, Lego has one. Like there's a whole span, of investable companies that are public, and they all have an investor relations website. Sometimes they can be a little dry, but there are like podcasts and things you can listen to help dissect
what
it.
Company is gonna put something that is to their detriment? It's always gonna be like, hey, we have this. I mean, it's a great resource to look at, but again, it really comes down to doing good due diligence and understanding what's going on. And I think right now you do see like these meme stops, like GameStop today is up 28 points because they announced the stock split, right? Even though that doesn't change any value of the company, it's up $28 on noise. And you get that a lot right now.
Right.
Like I think since the pandemic, you've seen a lot of stocks like that run, not on fundamentals, but just on hype. So I don't know.
Right.
Like they're only investing for this 1 month. So I don't know what they're going to really look at.
And just to go back a step, when Prady says fundamentals, he means things like how much cash does the company have in the bank? How much money did they make last quarter? Did they beat their earnings estimates? Those
are money did they lose?
Exactly. Those are fundamentals. And right now, as some of you might know, and some of you might not know, not every stock is trading based on the fundamentals. Like there's obviously current events that are affecting people's outlook, despite the performance of a stock. Sometimes a stock will, like Apple, will do really well, but then the stock price will go down. So it's
what I was touching on this earlier is like, when interest rates are so low, it's essentially free money. So people are basically able to borrow money and make better returns by investing in the market, right? And then once money becomes more expensive, so right now interest rates are going up. So you're basically in January, I don't know how much of the market you guys follow, but since January and February, the markets, the volatility index has gone up tremendously. And you need to really be a little bit more in tune with what you own in your portfolio. So a lot of the stocks that weren't making money, that didn't have strong fundamentals, basically got crushed. And companies that actually had stronger fundamentals, like an Amazon or an Apple, have seen, not as much of a retracement, and it actually came back and trading at a nicer level. So, market, there's fluctuations in the market day to day, month to month. And that's why, based on a competition, you have to take into those factors into consideration as well.
Right.
But maybe in your own life, you might want to take a Warren Buffett approach, where you can invest in companies that you like that have strong fundamentals and see how they grow year over year as well.
Totally. And as you can see on this chart, there's a breadth of other sources that people look to for information. I love YouTube. A lot of, I think there's, besides like cute cat videos and like funny things, YouTube is also like a great place to spot trends for investing. I was speaking earlier with a couple folks about LinkedIn. LinkedIn is a great place to connect with people in the industries you're interested in, but also just to see like what are people publishing about companies or competitors or what's going on. They're going to put out information on a source like LinkedIn faster than an investor relations website. So you can really keep on top of what's going on. And again, I mentioned it's lowest on the totem pole, but a podcast, I feel like, is a great source of information. And you can get some like trend spotters and some really interesting.
And, Christina, just to touch on that. So we're doing a request for a client on John Deere right now. And John Deere is like a lot of farming equipment. And my guys are saying they're getting a lot of the experts because they're like second or third generation farmers and like the kids are doing it. But on YouTube, they're basically like putting on great videos of all the different equipment that they have. And they're like talking about it. And once you go on social media and you're putting it out there, you're actually like happy to talk to other people about it. So that's a great place to find people that have some expertise. But I think that like, you could do a channel check going into like a Nike store, going into Lululemon, going into Starbucks. You can kind of just watch how traffic is, how many people are walking out with bags. I have a friend that runs a company that basically takes satellite images, and he only focuses on the retail market, right? So they'll take an image of like, how busy is the Costco parking lot? How busy is the Walmart parking lot? And based on how busy they are, you can basically give an assumption of what kind of quarter those guys are going to have as well. So people get information from so many different places. And the one thing is like, even though Tom, and he'll probably explain this as well, talks to a bank to get information, then he talks to an expert to get information, and he might talk to the company management to get information. What it's known as a mosaic of understanding. You want to basically create a mosaic, get as much information as possible. That way you have a full picture of what's going on, and then you can make a much better investment decision by getting all these different data points, not just relying on one, but many different data points to make a strong investment decision.
For sure. And one thing I thought that was kind of a funny thing, we've all heard about these like Reddit stocks or meme stocks in Brunswick. This is from the Digital Investor Survey. It's like obviously the Reddit trust went up in 2019, but the trust went down in 2021. Again, interested to see in 22, but the use of Reddit went up. So I don't know, beyond people's logic and like trust in something, they'll still use a source as a place to get information. And I think that's what we see when we see like these out of the blue stocks. It's like, even though people might not necessarily like actually believe in what they say, they'll take the risk. So when you're preparing to invest,
I'm curious, Christina, how many of you guys have like logged onto Reddit and like been involved in like being like, hey, like that looks like a great stock. Let me either buy it or put it in my mock portfolio. Probably a lot of you guys, I would think. Hands, no hands? Nobody? All right. Yeah. I think Reddit is where it's at these days. What about like stock twits? Do you guys look at stock twits? Yay, nay?
probably that sounds like a no.
All right, that's a resounding no. Okay, Reddit it is. All right.
Okay. So what this all culminates to is like how to prepare to invest individually. Some of you probably are thinking like, I never actually want to invest in a stock. That sounds totally foreign to me. And some of you might not ever invest in the stock. Some of you might invest in real estate or, startup businesses or your own business. So the key anywhere and at any point in life in investing is to identify your interests. So think about what you like. It could be like makeup. It could be animals. It can be the environment, technology. Hone in what your interests are. And then from there, you can set your goals and risk tolerance. If you have a little bit of money to work with, maybe your risk tolerance isn't as high. But if you have some disposable income, maybe your risk can be a little bit more fluctuating. After you set those goals, you have to get in and do the research, which is, again, what we help clients do, and then fact check. And I know that you guys probably get reminded to fact check in school, but it's critical when you're doing research, especially when your money is at risk. So again, thinking about interest, I don't know if you guys just want to chime in the chat, if there's if you guys want to type in some of your interests when it comes to investing, or even if you're like, I'm not actually interested in investing, it's just, you know, the presentation that DECA was offering this week. If you want to just write your interest in general, maybe we can relate back to that. And Prady, I can't see the chat, so if anything comes in,
yeah, I'll let you know.
Feel free to let me know.
But I mean, I think maybe just like even a question about like, you know, I don't know what level of stock experience you guys have. We're just trying to keep this general in nature. So maybe like you guys can chime in as well and let us know like what you might care about. And maybe like obviously when Tom gets on too, I'll let him know. So tech stocks, Jacob wrote like,
okay.
Yeah. So, you know, look, the other thing is this, at these mutual funds and at hedge funds, there's people that focus specifically on like the technology sector, and they're like masters of that domain. There's people that focus exclusively on consumer stocks. There's people that focus exclusively on industrials. So, you know, you can basically, and medical, biotech. So Tom actually covers pharma, biotech. He looks at technology as well. But like, you know, that could be something that really helps you pique your interest, because if you gravitate towards something like technology, then you can find a nice niche in the market and focus exclusively on technology stocks and basically be able to like really navigate that area well. But like consumer is another great area to be in. Or you could be a jack of all trades and a generalist, right? Wherever you see opportunity, you can basically dive in, learn about it, and move in and navigate that area as well. So like that's one of the things. Mutual funds and hedge funds definitely have industry specific expertise, and then they also have generalists that look at anything or anywhere that they can make money, including different types of strategies that they put into play. It's not just long short. They could do arbitrage. They could do all these different strategies. That if you look on our website under hedge funds, you'll see all the different types of hedge fund investing strategies that we cover, at least.
Yeah, and the ENG website is a great resource. We can definitely send that across. When you're thinking about goal setting and risk tolerance, again, this is not my language, not all of it, some of it is, but I got this from Investopedia, which I know you guys are using, but I wanted to keep it specific to what they promote so that you can actually win this competition. I like the SMART approach: specific, measurable, achievable, relevant, time-based. This applies not just to investing, but like, you know, athleticism, academic achievements, anything. So having goals in investing that are specific obviously lets you know if you've reached them or not. You should be able to measure them. So if you have a finite amount of money and you know you want to make another X amount of money, you have something that you can actually compare it to. It also needs to be realistic. Like it needs to be an achievable goal, and then relevant. So does it even apply to you? Does the amount of money you have apply to that type of goal? And time-based. So this doesn't mean you have to set a finish line, but maybe you say like, you know what, every month or every week, or it could be daily if it's a short-term assignment, like a 1-month challenge. Maybe every day at a specific time, you check in. And that way it's not controlling your life, but you have like a specific time where you can sit back and say like, okay, is this working out for me, or do I need to pivot? Basic due diligence, and obviously ENG goes, you know, into more specifics, but just a basic level of due diligence that you guys can all be doing is reading repeatable articles and subscribing to newsletters. So I don't know if any of you already subscribe to any type of newsletters, or maybe like your news is more agnostic. You just read whatever pops up on your phone, but you can curate what you get. As you guys know, you can filter out the things you don't want. Refer to investing focused sites. How many of you, I guess by show of hands or writing in the chat, have read a site like Cheddar or Bloomberg or Whale Wisdom to learn about finances?
So I think Christina, by the way, so a lot of them raise their hands, so they definitely use that. But one thing I wanted to chime in on, Whale Wisdom is a great site. I don't know if you guys have looked at it, but basically you can look at what's known as a 13F, right? And you can see the holdings of major institutional clients, what stocks they own and how much of they own. So like, you know, that could give you a little bit of background on like seeing how much of the institutional community can rally behind the stock. So you could go to Whale Wisdom, you type in 13F, and you could like pull up a stock. Who are the biggest shareholders of Apple? Who are the biggest shareholders of Microsoft? You know, I'm just giving you general names here, but you can even look at smaller companies and see who owns them, like which institutional clients own them.
And you can also look at heat maps. And what that means is like, you can see where's the most activity happening right now, or look at specific industries and look at where's the most activity happening. So maybe if you just like, as I mentioned earlier, you have an interest in tech stocks, maybe you want to look at that heat map and just see like who's putting their money to work in what stocks. And then from there, it'll give you ticker names and you can go into it, you know, not blindly. You're following the money, which is a really smart strategy. And the other thing is talking to fellow investors. So whether it's your friends at high school, your parents, your parents' friends, what our clients do is they talk to industry experts who are embedded in the supply chain, which means they work either in the industry or they're an industry observer, and they can provide insights that will help you better understand, is this a good investment I'm making or should I stay away from this investment? And lastly, always check your information. This is just good in life. Who wrote it? When was it published? You always want to look at things that happened recently, unless you're doing like a timeline analysis and going from there, which has value as well. Is there implicit bias? As Prady mentioned, if you're reading an investor newsletter, yeah, the bias is that our company is awesome and that you should invest in it. But always look for bias in other places too. And does it seem logical? And that's where you have to really use your mind and your gut. Like, does this make sense? Like, it might look good. It might come from a newspaper even, but like if it's an opinion piece and it just for some reason doesn't match with what you think, like go back and check again. So you can really trust yourselves. And that's the importance. You have to believe in what you invest in. And I didn't even format this right. So foul on me, but I love this quote. Successful investing is about managing risk, not avoiding it. And I think that's a key takeaway. Is you don't have to be afraid of what's ahead of you, but it doesn't matter what stock you get in, if you know how to navigate it smartly, you're not going to get into trouble.
You know what, Christina, on that note, Mr. Tom Askey, right there, bottom left, I see him with his golf shirt on. He's joined us. He's a former, or current, I don't know. Are you still a DECA member? You're on mute. You're on mute.
No, I am. No, I'm a former DECA member. I did sports and marketing back in the day.
All right. So Tom is with Allspring Global Management. He's a senior research analyst, portfolio manager as well, right?
Yeah. Help out with the portfolios.
Yeah, and so I invited him to kind of maybe should we do like a open Q&A, or did you want to talk a little bit about like things that you look at when you're making investment decisions? And we kind of gave him an overview, but I don't know, guys. Jacob, what do you think? How should we utilize Tom's time?
Yeah, I definitely think he should talk about a couple of things he looks at, especially with all the money he manages. But also know a couple of our students also have a couple of questions they'd like to ask you. So maybe just a couple of both, like a mix of both.
Yeah, we really would just want to hear like what you do, like generally, and like what you enjoy about it. And yeah, we just like Jacob said, we have some questions prepared. I just buy GameStop and then I play golf.
Oh, we're splitting.
Yeah.
We're splitting. 40. Oh, look, 25 points. Great. Just like GameStop, Tesla. What else? AMC.
That's right. All the meme stocks. We just own meme stocks.
That's right.
No, so I can give you a day in the life of a buy side investment analyst. So I work for a growth team. So we're looking for new and emerging growth opportunities that are in the world. And when you think about growth, there's obviously right side of change and wrong side of change. So we're always trying to find companies we believe that are on the right side of change, where a dynamic's happening, and we think if we're early enough, we can take advantage and ride that wave for as long as we think that change is going to continue to benefit that company. And I do healthcare investing specifically. So in healthcare, we think of right side change as you're either saving lives or saving dollars. And if you're not doing either one of those things, typically we won't look to invest in that company for us, for our style. And then I'd say, so what I do on a day-to-day basis is we'll find a new idea with sort of our North Star being it has to be right side of change, which helps us eliminate a ton of companies that are out there that we think are on the wrong side of change. So we'll find a new idea. Typically, we'll start with just kind of reading about it, learning about the opportunity. And then I don't know, Prady and Christina, did you guys talk about ENG at all?
A little bit, like how people use us, yeah.
Yeah, so this is where how I met Prady and Christina is I use their company called ENG, where I'm able to talk to experts. And being in healthcare, for me, it's a lot of talking to doctors and understanding, okay, I understand you have a new product, but I want to understand exactly how it's being used. Where are you taking share from? How are you using the product? What are the benefits? What are the disadvantages, et cetera? So we can get really knowledgeable on what exactly is going on in the marketplace and understand when one of those shifts are happening. And then from there, it keeps checking all the boxes along the way. We'll start to model it out and say, okay, we think it can grow X percent, the street's at Y percent, and here's why we think we're different. And then that's when we'll start to involve more people in the process and decide whether or not we want to buy the stock. So my job kind of is just running through that process constantly. We're always looking for new ideas. We have a portfolio of existing companies we have to pay attention to. During earnings season, that's when it gets really, really busy because companies are putting out their earnings reports, and we're in real time kind of updating our models and understanding, okay, what does that mean for our thesis? What are the KPIs, et cetera? So that's sort of a day in life is you spend a lot of time just reading, being curious, trying to find things that are going on in the world that people aren't appreciating or don't understand. So going down a lot of rabbit holes to see if we can find anything.
Jacob, you said you guys had a couple of questions, right?
Yes. Let me just get those students to put those questions in the chat real quick.
Okay.
Yeah, I can start us off with one. So what's one thing that you wish you knew while you were in high school? I wish I invested a ton of money in stocks when I was in high school. Compounding is the eighth wonder of the world. And if you can do it at a younger age, all the more power to you. And because if you just run the math, especially early on, if you guys are, my guess is 14 to 18 years old or whatever the ranges are. I mean, each year it keeps compounding and compounding and compounding, and the 100 becomes 200 and the 200 becomes 400 and the 400 becomes 800. It just keeps going and going and going. And to take advantage of that when you're young is a very powerful thing. So this is doing a call like this is awesome. You can hear from people who have invested, but I think if you can figure out a way to invest, it just has to be an ETF or anything, but get into the market early as you can.
I saw Caitlin had a message. I don't know how I can go back to it. Hold on, let me see. Oh, how do you judge whether or not to purchase a volatile stock?
Yeah, it's a really good question, especially in these markets. So we're long only, so we can't short stock. So we can only buy and we have to, assume it goes up. Hopefully it doesn't always. But I think, managing volatility is just a risk factor. And so for us, we'll consider a volatile stock, but we won't bet. So say we have $100 to allocate, maybe we'll only allocate $1 or $2 to that really volatile stock because that $1 or $2 could become, 5 or 6 if we're right. Whereas if you bet $5 and you're wrong, you lose that $5 and you're like, oh crap. Whereas you only have $1, you only lose $1. So it's all just like volatility is just a risk management tool in our mind. And we have what we call a barbell approach where we have our core companies that we think will keep compounding growth at a really high rate with really high margins. The volatility on those stocks isn't as crazy as some of the other, more volatile stocks. And then on the other side, we'll have like the barbell, like really fast growth, probably burning free cash flow companies where we just won't bet as much on those companies just because the risk is so high.
The next question I saw was from Sajin Patel. He asked, what indicators and metrics do you consider?
Yeah, that's a really, really, really good question because I should have mentioned this in our process. When we buy a stock, we have KPIs. Usually it's only 2 or 3 KPIs that we think are the most important, call them cells in the Excel spreadsheet. And if we can get those KPIs right, we'll make money in the stock. And so each quarter, those KPIs come out and we track, okay, if we thought like Chipotle was going to be a 10% same store sales growth and it was 15, well, great. And then hopefully that keeps our thesis moving along. Or if it was, we thought it was going to be 10 and it's 5, oh no, we have a problem. We should look in and make sure we're thinking through things the right way. So typically we only have 2 or 3 metrics. The metrics are different by company, but generally speaking, it's some derivative of revenue growth. So how fast they can grow their top line, some derivative of margins, how profitable is the growth, and then some other, random metric like customers added or, it just varies kind of stock by stock. But we typically try to have only 2 or 3 to focus our efforts.
This next question is near and dear to my heart. Thomas Conley, he knows how to push the right buttons. He asked, what is your opinion on copying government official stocks like Nancy Pelosi? I thought he asked, is it okay for them to trade stocks? Because you know what? They get to trade on material, non-public information, and they don't get in trouble for it, which is amazing to me. So the fact that they get to do that, I would definitely look at Nancy Pelosi's trading because she's been on the money for anything that I've seen, like on like those whale trades. I look at Nancy Pelosi, like she's always ahead of the curve. But Tom, what do you think?
I do not follow her trading strategy. Maybe I should. But no, I mean, I think, they clearly have insider information on some things. At the end of the day, the government's only the government though. So, they only know so much. And generally they don't know a lot more times than not. But no, I think clearly if they have information that they think they can make money on and they're going to, go through the hassle of doing it and having to disclose it, clearly they think something's there. But remember, they're government officials, not investors.
Take a look at Nancy's stock portfolio, by the way, Tom, because you'll be like, wow.
Yeah.
But Tom, what made you ask that, by the way? Like you must be following it.
Yeah, that's something my dad talks about. He's a financial advisor himself, so my dad talks about that all the time with me, and he always complains about it. And that's it. In my, I'm also involved with the stock simulator, and that's actually what I've been doing. And my stock portfolio has been going up pretty well. So I just wanted to know his opinions on it.
This is something I talk to my cousin Raj about all the time because he'll be like, Nancy, look at what she's doing. And it's absurd to me that a government official can trade on material non-public information and there are zero repercussions. And actually, during the Obama administration, they'd gone and put in a law saying that they couldn't do that anymore. But they slowly went back and reversed the law so that they can continue trading on MMPI. Look it up, Tom. It's crazy. I'm
gonna create a Twitter account that tracks all the stocks that government officials have sold that have gone up like 4 and 5x since they've sold them as well.
True.
I'm gonna post those ones.
He was only talking about Nancy. Look at Nancy Pelosi's portfolio because she's getting good information.
Government official stocks.
Oh, that's funny.
The next question is from Caitlin Wang. She asked, what are resistance and support bands?
Ooh, I don't know if I actually know the answer to that. I think, some people, so the reason we don't typically do chart stuff.
Technical analysis.
That's technical analysis. We do fundamental analysis. So we're focused on the business drivers, the financials of the company, et cetera. But a resistance band is basically when a stock's going up and it just can't break through, like say $100. It just keeps touching $100 and it goes back down, or it gets to $100 and it goes back down. That's sort of like where where people believe the market resistance is established. So sometimes when it breaks through that resistance, there can be a lot of momentum that comes behind that breakthrough because it kept testing it. Clearly, someone kept selling it at that $100, and there was always someone willing to sell it at that resistance level until it finally breaks through. And you'll get some like random stock movements that happen when they break through some of those resistance things. And then a support band is sort of kind of the inverse of that, of like, okay, a stock's going down, but it gets to 150 and then it pops back up, or it goes down again and then it gets to 150, it pops back up. It's just telling you that someone's willing to keep buying it or supporting it at $150.
And look, there are people that are just specialists in technical analysis, and that's all they use to trade. They don't even look at fundamentals. They don't look at any other of the parameters associated with trading a stock, but they just look at technical analysis. So there's probably somebody we can get that can talk to you about,
Yeah.
give you specifics of technical analysis.
That's as far as I go.
Hey, that's fair enough. Any other questions?
Any other questions?
I have a question.
But it would be a bit too long to
Oh, that's okay.
be like typed out. Yeah. My question is if companies are putting out a certain amount of ownership to be sold, what would do you know what would happen if, say, all of that were to be bought and somebody else tried to buy some more of it?
You're saying like on an IPO, when a company offers stock, they'll offer it out and it can go to one person or a bunch of people. And then you're wondering, like, once it's public, if someone tries to take a stake in the company to try to take it over?
What I'm saying is, since earlier they said that it was like companies will put out like a certain amount of ownership, possible ownership, like say 50% of the companies, for example, is like public.
Yep.
So there's 50% that people can buy. What happens if that 50% is like all taken up?
Oh, you're saying if one person takes all of it. This is a good question because it's important to understand two different sources of capital. So there's primary capital, which usually a company raises on an IPO, and primary capital goes directly to the company. So the company can use that $100 to go invest in sales and marketing, CapEx, whatever they want to do with that primary capital. There's also a thing called secondary capital, which is someone who owns the business today is offering up that capital. They can offer it up at the IPO if they've agreed to, with management and the board and et cetera, to offer up that capital. Or more times than not, once the company comes public and there's still a big like private equity ownership in it, they'll start to release that capital in an organized manner over time as the company gets more familiar with the public markets. So when you're buying a stock today that's not an IPO, that is just out there in the market, we're always buying secondary shares. So you can buy whenever things are trading, you're always buying those secondary shares unless you're actually buying on that IPO price through the banker who's banking the IPO. So we're always buying secondary that are out there because those are the only ones that are available in the public markets. Does that help?
Yeah.
Okay.
Christina, you said you had a question?
Yeah, you mentioned the phrase KPI a few times, and I just wanted you to explain that to the layperson, such as myself.
Yes, I should not use that lingo. Good call. So KPI is key performance indicator, and really it's just a kind of a way that we use to just focus on the right things. And this job in this industry is very distracting, and there's a lot of things that say, look over here, look over here. And again, if you can focus your energy and effort on certain metrics or certain cells, or if you know kind of what's going to drive the stock, it helps you kind of level set, and then you can focus your research on those key performance indicators as well. So that's why we use it a lot, because it sort of is our North Star for how we research a stock.
Oh, I'm so sorry to interrupt, but unfortunately, like the club time is over now. But thank you so much for presenting to our class, and I hope to have y'all on here again. Thank you again.
Thank you, guys.
Take care.
Yeah.
Thank you.
Thanks, Tom.
Yep. Stay Prady. See you, Christina.